We've done over 10 years or 40 quarters or 120 months of data collection and looking at what is the best portfolio construction and then to recalibrate every quarter based on gold mining companies' results and rebalance for those that are demonstrating the strongest growth in revenue and cash flow per share or trade at the highest free cash flow yield.
All right, welcome back inside our proactive newsroom. And joining me now is Frank Holmes. He's the CEO of US Global Investors. And Frank, good to see you again. How are you?
I'm outstanding with Go Gold.
Yeah, that's right. That's what we're talking about, your Go Gold ETF, and now trading on the Colombian Securities Exchange. But before we get to that news, maybe remind everyone a little bit about this ETF and really what you're seeing in the gold market.
Well, it's a smart beta 2.0. And what that means is that we've done over 10 years or 40 quarters or 120 months of data collection and looking at what is the best portfolio construction and then to recalibrate every quarter based on gold mining companies' results and rebalance for those that are demonstrating the strongest growth in revenue and cash flow per share or trade at the highest free cash flow yield. So when we created this unique product, a thematic gold stock picking portfolio, a very condensed number of names, royalty companies showed up of having a superior model. So business model. So what you see in this particular ETF is that 30% are three royalty names. And other royalty names like Osisko and Sandstorm, they also populate. And that's what makes it special and unique. So it has less volatility in the downside, but it catches and is making all-time highs as the price of gold is rising. Being listed in Latin America is really important because 30% of the portfolio are the three big gold royalty companies, Franco-Nevada, Wheaton Precious, and Royalty. And Gold Royalty is basic royalty. Gold is in Denver. The other two are one's in Toronto, one's in Vancouver, and Sandstorm is in Vancouver. So they have royalties in all over Latin American assets. And interesting enough, in Colombia, we see that these major royalty companies have several assets, like Wheaton Precious has a royalty on the Marmato asset in Colombia for the development, and they're increasing the production, which is controlled by Eris Gold.
And I would imagine that it also gives the people in that area an opportunity they see the rising price of gold like everybody else. So it gives them an opportunity to get within that market. And the Colombian Securities Exchange is well known in that area, right?
It is very much. And there's an interesting called the Andean Group that have connected between Chile, Peru, and Colombia as one super high-tech exchange. They have individuals for each country, but they all are cross-pollinating. So this is really interesting for me, and because they've also hyperlinked to the New York Stock Exchange. So if the ETF is listed on the New York Stock Exchange, then it makes it very easy to be listed there. And then it makes it easier for pension funds to be able to buy it because it is listed in their country. And it also gives them a currency hedge because it's all in US dollars.
And Frank, how about the gold market itself? Continues to be a real bright point as far as the stocks are concerned.
Yes, there's many forces taking place besides Trump's tariff war. It has to be other factors. In particular, China is very aggressive on trying to de-dollarize the use of the dollar. They've partnered with the BRICS countries. They've created their own form, and they're doing everything to do currency trading with the yuan. But what's happened is really has not impacted the dollar to the degree it has affected the euro, because when the Middle East take oil for yuan, they immediately convert to US dollars to buy equipment from the US or buying from Canada. They convert to dollars. So I think this battle for de-dollarization is incrementally slowly growing, and China is the biggest force. So they're the biggest gold producers, biggest buyers of gold. They've ignited other central banks for buying gold. And then on the other side of that equation, it's just the sheer concept of modern monetary theory this century by many central banks, particularly the G20, using money printing to try to ignite their economy, or if they have bad policies, cover them up with more money printing. What we've seen, Steve, is this century, gold has been positive 84% of the time.
Wow.
You have thought leaders like Ray Dalio writing up and on doing his own video clips all over LinkedIn, X, you name it, and it's all about the bond markets crashing, concern about the dollar's falling. Well, you buy gold. So I think that's what's the big driver as gold has become an important asset allocation, called alternative asset class. And I
Mhm.
think it's going to grow from 10% to probably 15 to 20%. But right now, only 2% of Americans have an exposure to gold and gold stocks. So I think there's much more upside.
Yeah. Frank, great insight as always. Great to see you again. Thanks very much. And we'll talk soon. Okay.
Higher prices for gold.
Frank Holmes, the CEO of US Global Investors.